All right, the live stream is going on YouTube and on Discord. Perfect. Let me just hide that here quickly and head over to my bento book. All right, the live stream is ready to go. As you can see, we had a pretty strong sell-off post London kill zone. So that happened. Other than that, my drawn liquidity obviously is the previous day's low. Hard to miss that one. It's not 8 a.m. yet, so we still have some time on the clock. All right. Let me check the stream here quickly. The stream is running smoothly by the looks of it. Let me find out, go over to OBS, Trading View Chart Analysis. Perfect. Make sure to drop a like if you're watching. This helps the stream to get some publicity. And let's head over to TradingView. So 8 a.m. just opened up. We have a new hourly candle. We had a strong sell-off once we broke the midnight level. Rapidly continued further to the downside. If we go to the 1 hour time frame, that's what we're working with at this point in time. We have a massive 1 hour bearish candle. We have a new range for the current day, premium discount. So London already swept the Asian sell side and the Asian buy side right here at the beginning. Right after midnight, we basically swept the Asian sell side, reversed, cleared the Asian buy side, and continued to clear the London sell side. So this hourly candle just closed. Let's check out the 4 hour candle. Looks pretty bearish. We rejected off the new week opening gap another time. We had a 4 hour bearish fair value gap overlapping with a 1 hour bearish fair value gap. We repriced into it. We failed to sweep this buy side right here, but we will see if we can do that maybe later today. So London sell side has been swept. We're below the midnight level. We have news coming up. Let me head over to Forex Factory. At 10 a.m. job openings. We do not have, get rid of NQ and YM here. Maybe this will help training me to be more smoothly. We do not have any bullish value gaps here to the left other than this one right here. Let's check the 15 minute. We don't have anything on the 15 minute either. So we stick to the 5. And because we do not have structure to the left that we can potentially use, we're gonna focus on the structure that we can work with at this point in time. We have our previous day's low here at 4295. We almost bounced up off the 00 level, 4300. And right now we're inside this bearish fair value gap. We have more fair value gaps to the upside, but this is the most recent one. And we want to watch it to see if this bearish fair value gap is being respected or invalidated with this new hourly candle. We have a tiny little volume imbalance in here. And roughly 7.5 points to sell side. Bearish fair value gap right here. Another tiny bearish fair value gap right here. We have bearish fair value gaps all over the place. I'm not drawing them in. We simply sold off very aggressively. Back-to-back volume imbalances for a continuation short, followed by a bearish fair value gap. And we seem to be respecting this 5-minute bearish fair value gap. We almost made a new lower low. I didn't engage on it. We did exactly the same thing yesterday. Also, we had a strong sell-off, followed by a fair value gap put in place at 745. And it seems like we're going to continue towards our current drawn liquidity, which would be the previous day's low. Alright, bearish fair value gap right here. I'm only going to be looking at the most recent ones. I'm locked in on the 150k account. I already made some profits this morning during the London session. Let's check that out quickly. Wait for this candle to close to get some more confirmation. 15-minute bearish fair value gap. That might be worth drawing in, as this is our most recent 15-minute. 5-minute. A bullish volume imbalance to the upside. This is our 15-minute at this point in time. Let's just watch price here. I'm not in a hurry to engage with it, at least on this account. Let's check out the trade that I took this morning. I head over to BentoBook, over to my account section, and if I go to the Apex 150k, right here, this was the London session trade, and if I zoom in on it, we see that I took a long based on this bullish volume imbalance. So we had this expansion, we closed above all these bearish fair value gaps, we managed to hold support, or let's say we consolidated around the New York midnight level. We had this perfect trend line with 3 touches. The first touch from the Asian session high, second touch, third touch, and then we got up into it, but we were rejected, continued lower. We swept the Asian sell side, and from there on we had a strong move to the upside. We closed back above the midnight level, open up with a bullish volume imbalance, about to break through our trend line. We had equal highs above us, so for me a high confluence trade, a high probability trade that we're going to expand to the upside, and that's exactly what we did. I stayed in the trade for 5, 10, 15 minutes before my final take profit has been hit, which was the Asian session buy side right here. We just hit it and I closed the position. Overall, I made 250 bucks on this one on the 150k account. I entered with one mini contract on ES, 5 points, that's 250 bucks. That worked out pretty well. So overall, the account is looking pretty good. I don't want to mess with it at this point in time. The drawn liquidity for right now is the previous day's low. We're still respecting bearish discounts, even though we had a new hourly opening, 7:55, 8 a.m. We already broke this little short-term low, fractal low, and we seem to be continuing further down towards the previous day's low. But it would be nice to see a confirmation close below this low before we continue, maybe, jumping into a trade. We have 2.5 minutes left. Do you guys have any questions regarding the London session trade I took? Right here, that's the execution. I entered right here on this volume imbalance and secured my profits right here at the 5 points target below the Asian session buy side. This was the trend line. You guys weren't able to see that perfectly on my bento book. We broke above the trend line. We retested it right here and continued further to the upside. Another confluence that I used to frame this long trade is that we just bounced off the VWAP perfectly right here, closed this candle above the midnight level, opened up with a bullish volume imbalance. I had my aggressive limit order set right here. My stop loss was below this candle's low. So this was the London session trade. 1.75 points in stop loss and a 5-point profit. Quick in and out. We continued higher, had a little break in structure, continued lower. Here it was a little bit tricky. I expected it actually to take out this buy side above this high, right at 4337.75. We didn't do that. Instead, we broke our short-term high inside liquidity right here with a fake out market structure shift. First, we swept this low right here, making it look like, okay, we formed a new lower low. We shifted market structure with a confirmed up closing candle, but then we engulfed it. We had bullish fair value gaps and a unfilled volume imbalance to support price, but this candle already invalidated the entire structure. That's where I actually took my loss right here on my Funnel Apex account. I took the setup, targeting the buy side. Didn't play out. I got out, I think, somewhere around this level. And then, we simply accelerated further to the downside very rapidly. I didn't reverse my position. It's post kill zone, so I don't execute. But let's see what we get here now. No volume imbalance, but we continuously keep going lower. If I would have seen a volume imbalance here, I would have entered into the trade with an aggressive entry. So from this fair value gap that we outlined at the beginning of the stream, that's almost 5 points, 4.7, 5 points so far. The time is 8:10 a.m. New York local time. So we can see that London swept Asia high and low and post the London kill zone, so post 5 a.m. We stayed inside the London range and swept the low of it. That's interesting. I'm going to leave it exactly like that on my chart. We close below the low, but we get an immediate pushback inside of our range. Very similar to what we saw yesterday when we started the stream at 8 a.m. So based on that, if we remain in bearish order flow, we would want to see this bearish fair value gap right here to be respected for the continuation lower. To deliver price efficiently, reprice into this little fair value gap and continue lower. I'm quickly going to fill up my water bottle. I will be back in 2 minutes. Alright, I'm back. So let's see. We got our retest of this bearish fair value gap. Let's wait for this candle to close. I'm only interested in taking a very clean trade setup. Only 150k account. Because it is already 250 bucks in profit for the day, which is my daily profit target. "20 seconds before this candle is going to close. And we want this candle to respect bearish order flow and therefore to respect this bearish fair value gap. If we don't do that, we don't engage. So from a 50% entry of this fair value gap, this would have already been 5 points to the downside. Essentially my target. So we closed above this bearish fair value gap, turning it into an inversion. The time is 8:15, so this should be a new 15-minute candle. The previous 15-minute candle with a nice wick to the downside. But we seem to be continuing lower. Let's find out. We have internal buy side resting above here and above here based on a 5-minute time frame. And if we take a look at the 1-minute time frame, we see that we have just filled this bearish fair value gap right here on the 1 minute. 3 minute time frame, we had a bearish fair value gap as well. So we theoretically should see lower prices. But of course, that's not what we would like to see after already having taken out this low. Not respecting bearish order flow in form of this bearish fair value gap. But that's sometimes what we get with a new 15-minute candle. Good morning, Scotty. Welcome back to the stream. So we managed to form a new lower low. We are currently 3 points away from our previous day's low. So this should still be the current draw on liquidity. Two and a half minutes to go before this candle is going to close. Let me check if there are any questions on YouTube. Nope, there are not. Go back to trading view. So we took the low one more time. Wait for this candle to close. Very similar situation that we had yesterday when we started the stream at 8 AM. Just about to take out the previous day's low, where we got in short of of the low hanging fruit fair value gap, the most recent discount level. Then we got stopped out at break even and re-entered the trade towards the previous day's low. So let's see what we're gonna do today. Wait for this 5-minute candle to close. It's also a 15-minute candle. So for the object tree right over here, I usually have folders for every single day. This week I haven't done that yet. So yesterday I just deleted all my analysis from yesterday, and I usually do this, after every week. Start fresh, otherwise I would have too many folders in here. I don't like that. So theoretically everything inside of here I should be able to put into a, no, we want to find the new week opening gap. These three are the new week opening gap. Correct? Nope. That's the previous day's high, so we put it out of this little folder. Where's the new week opening gap? So we already have that folder. That's usually how I do it. New week. That's my from my weekly outlook, the analysis, the lows that or the liquidity that I'm interested in. This fib retracement, where does it come from? Nowhere, so we get rid of it. Usually I put all trend lines into one folder and label it as liquidity. But it's, very much up to the user how they want to organize their object tree. That's really all it is about, to organize all your analysis and to turn on and off specific elements of your analysis, like for example the higher time frame analysis. I don't want to look at it every single day when I take intraday scalps, but I want to, if I want to, I can enable and disable it very quickly by heading over to my object tree. Hang on. Put my indicators at the top. That's today's VWAP. This is yesterday's stealing range. This is the Asian session. That's the London session. So we can group those two together. Tuesday session ranges. That's the VWAP for today. And everything else, let's leave that on the chart. That would go down for me as my Tuesday analysis. And if I want to hide that quickly now, I can do all that. So all these levels that I drew up most recently are already cleared. If I want to avoid looking at all the liquidity, I can do it as well. New week opening gap, enable, disable it. The session ranges, the VWAP, previous day's range. Yeah, you can also just categorize it into Monday, Tuesday, Wednesday, Thursday, and Friday analysis. And once the week is over, reset everything and start fresh. Do your weekly outlook, put everything into your higher time frame analysis folder, and yeah, start fresh for the new week. Yes, it definitely is. So much easier to keep everything structured because throughout the trading week, you are likely to draw plenty of lines and then you switch time frames and you can't really, you're always annoyed. Let's say you do your 1 minute analysis and then you head over to the 1 hour time frame and everything is cluttered. Sometime that leads you to just delete everything. And if you structure it like this, you won't have to delete it. You can simply turn it on and off. You can also adjust the settings. So for example, right here, this Tuesday analysis, I don't like to see that on any time frame higher than the hourly time frame. So I'm simply disabling the entire folder for any time frame above the hourly time frame. And I want to specify that on the hourly time frame, I only see it on the 1 hour time frame and not on anything above. So if I go to the 1 hour, I still see these bearish fair value gaps that I drew up, but if I go to the 4 hour chart, I do not see it anymore. And we can do the same thing, with all these folders if we want to. Anchored VWAP, Tuesday analysis, Tuesday session ranges, visibility. Do not want to see that on the higher time frames and also not on the hourly. So if I go now to the hourly, these boxes should disappear. Just a great way to keep everything organized. All right. Let's see. Consolidating, if we go to the 1 minute, this would be a potential market structure shift, little swing point. If we manage to break above it, we could see a potential retracement in the side of our internal range right here of this very strong sell-off. If we draw up our current day stealing range, premium discount, so we see that a retracement maybe to the VWAP could be likely. This is still our drawn liquidity. Liquidity we should be moving towards. Previous day slow, we cleared first day slow. And below our previous day slow, we have the previous week's low. Right over here, yeah, previous week's low. Inside of that, we have a very big bullish fair value gap right here. We bounced off at one time. So right now, I'm pretty glad that I didn't enter. I'm gonna wait and see how this is going to play out. I mean, after such a heavy distribution or expansion to the downside prior to 8 a.m. So right here we can see this is 8 a.m. That's when we started streaming. We could have scalped quick 5 points from this consequent encouragement of this bearish fair value gap into a new short-term low. But yeah, I think it would be healthy to expect a retracement. And where we would expect that retracement to go towards, can simply use our premium and discount tool. Roughly the 50%, so to 4,317. And if we go to the higher time frame, let's go to the hourly here quickly. What we have here. Tuesday analysis, visibility, turn it off for the hourly. And turn off the new week opening gap here quickly. So on the hourly time frame, what we did is we bounced off first day slow right here. Let me just make everything clean. Yeah, didn't help anyway. We bounced off it, formed a high, a higher low, a higher high, and now we already formed a lower low. So we could look at our most recent down closing candle. Yeah, let's use the 15-minute time frame for that as our breaker block for potential resistance. This is our breaker block based on high, low, higher high, lower low. So old support turn into resistance. Keep it simple. And now if we bring it down to our 5-minute time frame, quickly turn on our new week opening gap again. Yep. This could be a potential target for a quick long scalp. And we can also see that this 15-minute breaker block also lines up with our 5-minute breaker block. We look at the consecutive down closing candles. Lowest down closing candle. 1, 2, 3. These 3 candles, this array of candles, should hold price. We also have plenty of bearish fair value gaps to use to continue lower. Also on the 15-minute time frame, we have the VWAP inside of that range, and the price would have to return into a discount before it continues to deliver into a premium, which would be the previous day's low. But let's see if we can make it up there. For confirmation, I would like to see a close above this lowest bearish fair value gap. If we see that, we have our first little signal that price is not respecting bearish order flow anymore. Right now it still did. I mean, all we did right here, by the looks of it, is that we swept a internal high. Sweep internal high, pick up some stops of traders that got in short, trailing their stop loss to the specific high. That's what we like to do. To continue, like into the initial trend direction. So this could have been a good turtle soup entry. But we will find out. Let's get rid of this and this. Go back to ES1. See if we have any questions on YouTube. Nope, we do not. We're still live. Yep. Perfect. Yes, price is moving from external mainly to internal, but on its way to external liquidity. It can also, yeah, I like to use the metaphor of a car driving. So the car is currently driving to its destination, but it ran out of fuel right here. And to refill fuel, it likes to pick up some stops, run some internal liquidity to continue on its journey to its final destination. That's the best way how we can explain that we took this internal high and still continue to lower. Pick up some fuel to continue into external liquidity. Yeah, it sounded much better when I said it out loud. I thought like I'm gonna screw it up, this little metaphor, but yeah, pick up some fuel to continue to its final destination. Same thing here. We had our break in structure, we continued lower, 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 so we already put in place a lower low right here and a lower low right here. But before selling off very aggressively, market makers like to get rid of weak shorts. So everyone that jumped in short maybe of this bearish fair value gap has already trailed their stop loss to this high. So we have buy stops resting above here and buy stops resting above this high. The short-term highs according to each and every lower low we have made. What do? We run them very quickly, make it look like we shifted market structure bullish to quickly sell off. Pick up some fuel to continue towards its destination. Hmm. 50 seconds to go on this 5-minute candle. We have our London session breaker block. We already swept the Asian session high, so we have potential. If we look at the current daily candle, let me use the indicator here quickly. Yep, that's the current daily candle. So if we take a close look at this, we could have potentially already put in a high in place since we swept the Asian buy side, sort of very aggressively. So in order for price to take out external, we might sweep the previous day's low before we continue higher back into a discount. So yeah, very similar to yesterday. We're just gonna use yesterday's example. We cleared right here Friday's low. What did we do immediately? So this was right here during yesterday's live stream. We went short of this bearish fair value gap right here at 8 AM. We hit our target, which was the Friday low. What did we do afterwards? We repriced back into a discount of the entire dealing range for the day. So once again, the London session has put in place the high of the day. We sweep external liquidity, move back towards internal liquidity. We reached the 50% level of this little 2022 model. This was our third win for the live stream. Consolidated, push price once more into a discount, fill the inefficiency, and we continued lower to run some more external sell side. That's how price likes to move. Yesterday's range right here, and today we could potentially see the same thing. We're gonna run out our external liquidity to reprice back into a potential discount to continue lower and reverse on Wednesday, for example. So very similar to what we saw yesterday, just the other way around. Something like this. And then we could also see that our potential breaker block from the London session could come into play. And yeah, resist price right here. Could also take a look at this right here. We also touched the breaker block. We had the Asian session high and the Asian session low somewhere over here. Yeah, we swept the low, we ran the high, we sold off very aggressively after the London kill zone closed right here at 5 a.m. So 5 a.m. closed, we continued to sell off. 8 a.m. came in, we started the stream. We cut a quick little scalp out of this bearish downtrend towards its destination, and then we repriced back into the breaker block inside a discount for the entire daily dealing range up to this point. Up to this point, the low was right here, so we reprice into a discount to continue back into external liquidity. And if we project that over to today, we moved into a discount of yesterday's dealing range right here, swept the Asian buy side, sold off outside of the kill zone, and now we entered the kill zone. We basically see the exact same pattern again, run out the previous day's low. So we will see how similar it's going to be compared to yesterday. But essentially that's the exact same setup. Let me get rid of this Fibonacci range tool. No, not this one. This one. Turn off the power of 3 indicator. Pick up some stops. Continue lower. What's the entry difference between the ICT YouTube model and the SilverBullet continuation? The difference, I mean, in both scenarios we would enter on a fair value gap. So entry wise there's no difference. It's the overall framework. Lots of YouTubers out there, they merge the 2022 model with the SilverBullet setup. I don't. For me, the SilverBullet is a simple continuation trade of a discount, of a fair value gap in discount or premium. For the, so like right here, our idea is we have a strong belief that price wants to take out the previous day's low. That's all we need for our SilverBullet setup. We have a strong belief that we're going to, that the previous day's low is our drawn liquidity. We go back and identify a fair value gap that could be used to deliver into our drawn liquidity. Like for example yesterday, this 8 a.m. bearish fair value gap right here, for the continuation trade into our drawn liquidity. Whereas the 2022 setup is a reversal setup where we wait for external liquidity to be run with a displacement, a shift in market structure like right here, leaving behind a bullish fair value gap. We enter on that bullish fair value gap or breaker block for a continuation back inside of the current dealing range. Or the opposing external liquidity. I explained the difference on my YouTube channel as well. Didn't want to do that. Right here, if we head over to my YouTube channel, previous day's low should be hit. Head over to accumulation zone, over to my videos. I also have a playlist covering orders, ICT for beginners. And if we go into here, we have the 2022 model video right here and the SilverBullet setup right here. And that's in the SilverBullet setup, I point out the differences between the 2022 model and the SilverBullet setup. And I also made a new video about the 3 drives reversal pattern. Worth to check it out. It has less views than the 2022 model or the SilverBullet setup, because people don't type in 3 drives reversal pattern. they are more likely to type in SilverBullet or 2022 mentorship setup. Let me get back to the live stream now. And check back on TradingView. We haven't cleared the previous day's low yet. But yeah, same story as yesterday. We did it from our lowest bearish fair value gap, repriced lower. And yesterday we also have been stopped out at break even after forming a new lower low. Picked up some stops to continue on its journey to the final destination. Same thing yesterday. We got filled at the 50% of this bearish fair value gap right here at 8 AM. We formed a new lower low, got stopped out at break even. We picked up some stops and delivered lower into the previous day's low. Funny how similar today and yesterday are actually. Alright, we just hit the previous day's low. Today I didn't engage on that trade. I already made some profits on my 150k account. So let's just watch and see what it's going to do next. Based on what we saw yesterday, we could expect a pullback into internal liquidity after having swept the external liquidity. The London session was great. Well, let's say parts of the London session. The first part, right here, I secured 250 bucks on the 150k Apex account, 133 on my new 50k challenge, and on my actual funded account, I lost 250 bucks because I actually tried to long from this bullish fair value gap and I got stopped out right here. I wanted to see this buy side liquidity right here, AM session or PM session high to be taken. Didn't work out and I took a small loss, which is fine. And yeah, I completely missed the opportunity for this massive sell-off. But at least on the 150k account, I secured profits for the long. Right here, my bento book. This was the long. London open, we consolidated around the midnight open. We closed back above it, open up with a bullish volume imbalance. This was the dead giveaway for me that we're going to run out all these relative equal highs here. Asian session buy side, new week opening gap, paired with a trend line liquidity. What they like to do is to run it out quickly, and I secured 5 points right there. So overall a pretty decent London session. 1 win and 1 loss. This was this trade I referenced. I entered on the volume imbalance at the close of this candle, retested the midnight level and secured 5 points. We didn't manage to close below the previous day's low. Short-term high cleared. We continued lower. Let me find where the 830 level is sitting at. Right here. 830 open. Dotted line. Our breaker block for the London session based on a higher time frame. We swept external prior to the New York Open. That's also interesting. More external liquidity would follow right here, which is the previous day's low at 4277 right here. To see if we can expect a potential reversal here, I would like to see most recent bearish fair value gap we have put in place. to react as, so I want to see price cut through it very aggressively, retest it to continue to sweep some internal buy side, moving from external liquidity back to internal. Yes. But I think that's not very likely prior to the New York Open. And today I won't stream through the New York Open. I will only stream until 9:15. So this would have been a short opportunity. Today I hesitated. I really could have entered somewhere here and quickly scalp 5 more points, because the strong liquidity was pretty obvious. I started the stream, so okay, we're a few points away from the previous day's low. Couldn't get much easier. Same story yesterday. Secured 250 on it and done. Right here, pre-New York Open. Same trade. Initially entered right here. Added more on the volume imbalance. Stopped out at break even. Pulled back further. Ran out some internal high. Rejected, retested, and we got actually in on the retest of the fair value gap. I don't think that we got the retest today. No, we didn't on this candle. Kind of, but also not. Now, this morning during New York, I did not take any trades. 8 a.m. opened up right here on this bearish candle. Like I said, I wanted it to, essentially play out like this. Maybe without the consolidation prior to the sell-off at 8:30. But yeah, lots of rebalancing to do. If we look at the higher time frame, the 1 hour chart, 1 hour candle is going to close in 11 minutes. We swept external, could see a potential move back inside of this massive 1 hour bearish fair value gap. So we already have a big range today. If we measure from the London high to the current low, that's already 41 points. We could expect something similar today actually, like we saw yesterday at the New York Open, where we just consolidate because we already hit all the major targets. Or we simply sell off. There's always another option in trading. Rejected for our bearish fair value gap. I likely would have taken a short if we would have swept this buy side right here, but we didn't. Unfortunately, we fell short of it by 1 point roughly. And then right here, after we picked up stops, what I wanted to see to engage short, I was long at this point in time. We picked up stops right here and right here, pumped back above it, and then we could look at our breaker block, the lowest down closing candle. We closed below, we retested with a bullish volume imbalance. That's what I didn't like, and we also had the VWAP perfectly aligned with it. Today the VWAP has been respected, like spot on. Retested, pump up, retested, pump up, break below it, retested, and sell off. So I would expect at least a healthy retracement towards the VWAP, which is aligning perfectly with the 50% of this breaker block, the London session breaker block. We swept Asian session high, found a new lower low, so old support turned into resistance, our breaker block. If I see a good setup, yes, I'd say I trade morning and evening stars as additional confluence. Where did you see one? Check out the 1 minute here quickly. quickly check if there are any questions on YouTube. Nope, not yet. NQ hourly candle. Then let me take a quick look at NQ. Four PM. Right here. What off on? You trade the Asian session, right? Yeah. I can't because I'm dead asleep at this time of the day. I'm glad that I can trade the London session, but yeah, I guess Asia has some nice moves as well. I mean, they're slower, smaller. Not sure if they're easier to predict. Most of the time, if you can't trade London, you always look at London price action. It looks so beautiful and you wish you could trade London. But once you actually trade it and have to execute live while the candles are forming, it's not as simple and as apparent anymore. So you're always sort of trying to chase what you can't trade sessions wise. But yeah, today Asia, we open a daily candle, lower low, picked up some stops, continued to sell off, had a quick bounce. Yeah, tough to trade, for me at least, with my tapering approach. That's why I'm glad I'm asleep during this period of time. One more minute to go. Let's see if we can make a lower low, or if we're going to leave behind equal lows here on this 5-minute chart. Finally catching up. Well, I didn't do much NQ analysis, but liquidity-wise, we still have Friday's low that has been untouched. So yeah, the entirety of like Friday's high and Friday's low so far, if we look at the daily chart and get rid of our drawings, we have 2 inside candles so far. Yesterday we spent the entire time inside Friday's range, and today we spent the entire time inside Monday's range. Not ideal conditions, but I mean, yeah, we had this nice little bearish fair value gap here. We moved from external liquidity back into internal inefficiencies that we have left behind and continue into our original direction. I haven't done a higher time frame outlook on NQ, to be completely honest. I only did it on ES. Thank you, I see. Lots of trend lines on there. Alright, so we swept these equal lows. Let me see. So yeah, also October usually is a ranging month. If we have a template in play to get a end of the year rally during November and December. Fair enough. check out the 1 minute. This would be our market structure shift level at 8:45, the high. Yeah, that's the same high. What's the time? It's 8:55. So the difference to yesterday, I mean, we had a very similar like trading day compared to yesterday. Sweep Asian session high, reverse, take Friday slow prior to the 9:30 opening. Right here at 9 a.m. we took that sell side liquidity. And then, yeah, starting after 9:05 a.m. New York local time, we pushed up, 9:30. Did the market structure shift. We were left behind with this 2022 model. And we secured profits right here at the high to the tick, because this was the 50% of the day's dealing range right here. On the live stream, we hit it to the tick and continued to range. We had power speaking at 11, and right after 11 is where we got our expansion to run out buy side one more time, internal liquidity, return into a discount one last time before we continue to run out the next sell side liquidity target. And today I kind of would expect the same. Run back inside of the towards the London session breaker block and continue lower to sweep the previous week's low. Yes, Agent Smith is in the USA. He's from, let me try to remember. California? I'm not sure. One minute to go on this 5-minute candle, and then we get a new hourly candle as well. So that's the hourly chart currently at this point in time. Pulled back inside of the new week opening gap, swept the Asian session high, fell short of this buy side liquidity and sold off. Very similar to yesterday. We run out the high, sell off, consolidate during New York AM, continue lower during PM or before PM. By 12 we have already hit that liquidity. So 22 seconds to go on the hourly chart. No volume imbalance. And we also didn't close below this low. Let's see what this new hourly candle wants to do. Potential for a 1 hour bearish fair value gap here. Now we have a confirmed 1 hour, a huge 1 hour bearish fair value gap. Really? I mean, come on. $15-minute. No bearish fair value gap here anymore. All the fair value gaps come from or originate from the 5-minute. Currently, this is our dealing range. Other way around. Green's always my discount, red's my premium. So right now we're in a premium at the low of the day. Price could pull back into a discount. Should be sitting up here, matching up with the VWAP and the breaker block. So yeah, could see potential resistance here. 5-minute time frame. 1-minute time frame, we now have equal lows. And this is our current market structure shift. level for the 1 minute time frame. But honestly, guys, not something I'd like to engage with. I would wait for a 5-minute market structure shift, which for me personally would happen if we close back above this high, get a retracement at 9:30, and be careful, we have news at 10 a.m. to push back into this breaker block. We just swept external, so a move back into internal liquidity or inefficiencies is likely. But we hit the main objective for the pre-New York Open, which was this previous day's low. And it's really a shame that I didn't take it. I just don't have a account to take it on. If I have already secured profits on 150k during London, I'm not really interested in continuing with that same account. I much rather save my profits and lock it in as a green trading day. I don't like to take 10 different trades on the same account, because if I lose my second trade then after my first trade has been a winner, I feel like I left something on the table. I was up 250. Damn, it would feel so good if I'd be up 250 now. And now I'm back to break even. That really sucks. And then, you guys know the drill. Then you take a third trade with less reasoning, less confluence, and you put yourself into drawdown. And now all of a sudden, from a profitable green day, you are now in a drawdown. You see a red number on your TraderWeight account, and you don't like that, so you enter a fourth time. I mean, it's that same cycle every damn time. That's what I'm trying to break. Exactly. And in a good book that I read, it's called, goddamn, what's it called again? I have it. Let me think quickly. The Mental Game of Trading by Jared Tendler. Like he sort of told traders to figure out what their like worst triggers are. So like what's starting that entire vicious circle that you start green and you end up red at the end of the trading day, and you repeat it over and over and over again. And that was the reason for me. I start green, I lose a trade, the second trade, and now I'm back at break even, feeling like I have left something on the table, because theoretically I could already close the charts and enjoy life again. But because I gave the profits away on that second trade, I am now more likely to take a third trade. And if I lose on that third trade, I will certainly take a fourth trade to make back all my losses and ideally make some more profits. And once you hit that break even level, you're like, finally, I'm green again. And then it turns around and you're red. You're in even more red than you were before. And all this originates from me taking too many trades, especially if my first trade's a clean winning trade. No, don't like that. All right, so we have that 1 minute market structure shift right here. We closed above. We do not have a proper fair value gap to enter on other than this one down here. We have equal lows as well. So not ideal if you ask me. The break of structure or market structure shift didn't came with a fair value gap to enter on. Maybe we get one on the 5-minute time frame. If we get one, I might take it. Might. Take the money and run. Yeah, basically. Ah, that was the name of the book. No, it's would be a good book. Gonna remember that. Take the money and run. Get away as quickly as possible before you can mess it up again. So across the board on my Trade-O-Wait accounts today, this one's already done. This is my 50k in London now. I might take another trade on this one, but yeah, I'm running in danger zone here because I'm already green, made 133 bucks in profit. Why risk it? In drawdown 258. If I would continue here and I would put myself in more drawdown, yeah, wouldn't end well. And I only have this account left that I, yeah, will likely take a trade post 10 a.m. And the 150k account is up to 50. We'll see. Considering to take a reversal trade here. 1 minute market structure shift. If we invalidate this bearish fair value gap, this would give me more confidence. Then we have a inversion fair value gap paired with a bullish fair value gap for a potential run into internal liquidity. My entry from here, that would already be 5 points just to run out this internal buy side, which could be a good play. Let's measure 5 points to the downside from our entry right here. Now, this wouldn't even cover the entire fair value gap. So right here, at this point in time, we have a potential for a 5-minute bullish fair value gap. So if we get an entry off here, it's 905. Not sure if that will play out prior to the New York Open. 5-point stop would be fine. This is more a paper trade idea for me at this point in time. If I wouldn't have taken a trade on this account yet, then I would take it, I think. Let's see. Three-minute time frame. Also have two bullish fair value gaps here now. We had our market structure shift on the 3-minute as well. Let's wait for the 5-minute to close. Seems like we're not gonna close above this bearish fair value gap. I don't like that we're 20 minutes away from the New York Open. I will wait to place a trade. Maybe I can use the new Apex 50k. Oh, tough one. Now I will refrain from entering here. 50%. 5-point stop. 8.5 target. Let's try it. Check out the lower time frames first. 2 minute. 1 minute. Come on, load. would you? Let's see.
Order filled.
We want to see this bullish fair value gap, the first bullish fair value gap inside this entire downtrend to act as support. If I see a close below, I'm going to be very quick to exit my position. 5.5 points. Yeah, let's see. Entry very early on. We could have done the same thing right here, just on a different time frame. So here on the 5-minute, we picked up some stops to continue the delivery lower. We could have done the same thing here on the 1-minute. We pick up some stops to continue to run lower. By stops, I mean this little short-term high. Let's see. Then at least we took one trade on the live stream today. I missed the live execution. I still mentioned that we could see this potential move that we saw yesterday towards our draw on liquidity. Did anyone take that by any chance? Well, let's see what we get. Gonna be quick to cut a potential losing position. Come on, TradingView, would you load? Almost 1 minute to go for this 5-minute candle. If we close below this bullish fair value gap, I cut my risk early. "30 seconds to go before we get confirmation. I'd like to see it closing back above my entry, or on my entry, above the 50% of this bullish fair value gap. If we close right at the low, might take an early exit. Yeah, we still closed inside, so guess I'm gonna hold. We're gonna let this trade play out, and after this trade I will finish the live stream to prepare mentally as well for the 9:30 opening. Today I want to trade it by myself. But yeah, theoretically, just as a little outlook for everyone that's watching, besides this little trade right here, we are at the low of the current day. We had a 1-minute market structure shift, left behind a 5-minute bullish fair value gap. We could ignore that and deliver lower. A sell side objective for me would be the previous week's low. Right here, a potential continuation at the New York Open. Or before we run more external sell side, we could also see a retracement back into our current dealing range from the London session high to our current low of the day, back towards the 50%, breaker block and VWAP. But we will see about that. Not looking good for the long right here. Let's see if we can close back inside this bullish fair value gap. If we cannot, I'm going to exit the trade or I'm gonna be stopped out. Stop loss gonna be 4.75 points right here at this low. Nice, I like to see that push back in. Two and a half minutes to go on this 5-minute candle. Let me quickly see if we have any questions on YouTube. I can check DXY, but I'm not interested in GU. I only specialize on the ES futures charts, so I could, but I'm in a trade right now. NQ hasn't taken prior day low, makes me nervous to take a long on ES. Yes, same for me, but we have valid SMT divergence, and yesterday we did exactly the same thing. NQ didn't take Friday's low, which was the previous day's low, while ES did right here. Cleared Friday's low, and we did exactly what we are looking forward to do today one more time. So just playing the probabilities. And if I see a close below this bullish fair value gap, I'm out. Cutting risk early. It's a good opportunity, worth taking. You will always find some reasons to that go against your trade. That's the difficulty, sticking to your bias then, especially if it's going or if it seems to be going against you. $9.15, new 5-minute candle in 40 seconds. Prefer a close back above the 50%. If we close below or get a volume imbalance below, I'm out. So I'm going to be watching it very closely now. During those last 30 seconds or 20 seconds of this 5-minute candle. Less than 10 seconds to go. 4, 3, 2, 1. Bearish volume imbalance. I don't like that. But we're still inside the bullish fair value gap, so I'm gonna stick to it. We put in place a new bearish fair value gap. So let's see. Wait for one more 5-minute candle for the 9.25 candle. So we already wicked inside of this bearish fair value gap. A good confirmation for a long personally would be if we see a close above the bullish one right here. Let me line it up, and this bearish fair value gap. If we reject from here, close below, and we leave this volume imbalance open, out. But now it's waiting time again, patience time. Our stop loss is right here at this low. That's what we would not like to see here. We retested the bearish fair value gap inside this bullish one. The only reason I didn't close is because we still kept respecting this bullish inefficiency. Maybe we will. In 2 minutes and 45 seconds, we're going to be a lot smarter. Time to lean back and watch. Not much we can do after we engaged. Two minutes to go. Let's check the lower time frames. 3-minute time frame. Still kind of respecting this order block. Evening star formation right here. Up close candle, doji, indirect bearish engulfing. Not good. 2 minute. 2 minute fair value gap, the lowest one at least, seems to get some respect. Check out the 1 minute. Same here, we're still respecting this lowest discount. Well, we're bound to find out. 1.5 minutes to go. I would prefer that we are going to close in this bearish volume imbalance. Let's see, last minute of this 5-minute candle. What is it going to do? Fractal power of 3. I really don't want to hold through the New York Open, to be completely honest with you guys, but guess I have to sit through it. 25 seconds to go. And we closed on this bearish volume imbalance, so that's a good sign. That's what I wanted to see. So, yep, can't do anything. I would have also liked a close below, then I could simply get out of the trade, but we will see. It's either going to be take profit or stop loss. Internal high, internal high. Let's find out. I'm quickly going to the bathroom. Nothing to lose. Yeah, we find out. Looking good, but could look bad quickly before being there. Why not close now? Good question. Why not close the position now? Because Setup has been put in place. Really, the New York Open should just follow suit with the current setup. Could close now, but then it wouldn't have been worth the risk I would have exposed myself to. That's my thinking. I don't know. Secure quick $100. Maybe. But I like what I see so far. We kept holding support on this 5 minute and the lowest 1 minute bullish fair value gap right here. We seem to be ignoring this bearish inefficiency, pushing back out outside of our 5 minute bullish fair value gap, targeting internal highs. Two minutes to go until the New York Open. Now you're starting, now it's starting to, like, since you said, why not close now? That's always a little trigger impulse that's all I need sometimes to change my decision making very quickly. That's all good. Yes, I'm already protected against drawdown. So let's find out. Don't be sorry further on. Makes perfect sense if you don't want to hold through that volatility. 1 minute to go. Secure quick 125 or wait for a bigger profit. Dilemma of the day. Further on, you entered long? No, Ram, you entered long. I would advise you. No, I'm not saying anything, it's your trade. Not a financial advisor. Neither this is financial advice. Should be a good entry. $30 seconds to go. Quick to trail my stop loss if we should see a quick explosion. But I like what I see. Into the New York Open, we seem to be getting a strong push and not a rejection. 2-1 bullish volume imbalance. Swept the first internal high. Going to secure here.
Order filled.
Done. Nice. Could continue higher now. Yeah, of course. Let's see. Next target would have been hit. Let's see. Quick ends model. Glad we took one trade on the stream. Always feel bad. Okay, here goes that next internal buy side. Done. Next internal buy side up here. And then we have our London session breaker block paired with the VWAP and the 50%. Exactly as outlined and exact same setup like yesterday. Too easy. Move from internal back into external. I don't know. I already secured my profits. Today seems to be a pretty good day. Up for 30 on this 50k account, up to 50 on the 150k. Unfortunately down to 50, but it's part of it. Not trying to hide my losing days. 100% transparency. You see me executed live as well. Unlike all the other streamers that do ICT analysis, blah, blah, blah. They always tell you, like, you sign up for their membership. I know because I've been in so many private groups. Like, oh yeah, join our daily live trading sessions. And literally every time it's the same. They say, yeah, they share their signals. But all they do is they have their clean chart open. And then you hear someone say, yeah, I entered long at 4295. While the candle's already up here, they only tell you they had a winning trade if it's already looking like it's going to win. So the candle is moving up, and then they tell you, oh yeah, I entered right here at 4296, and yeah, I already took profits. Or yeah, and by telling you that they already got in, it's one of the biggest triggers that you could face in your trading journey, because you're sitting there watching the, like, so-said guru, or the person you paid money to watch him execute, blah blah blah. Well, now you're listening to that person, and he's saying that he already got in. What do you think that's going to do to you? Well, I can say from my personal experience, that's triggering the shit out of me. And sometimes, not sometimes, most of the times, it happens that I go against my plan and I jump in late just because I heard this little sentence that he already went in long. I could do the same thing. I could hide my, I could share a different screen and do not share my executions and say, yeah, I got in long here, and once it plays out, I'm sharing it, just to make it look like I'm profitable. Super easy to fake. But not like this. All right. So that's done. 9:30. Took internal, just like anticipated. I would expect a continuation towards the VWAP. It's usually my baseline throughout the day that I refer to. We see during Asia, we consolidated, we move away, we get back towards it, consolidate, push above it, bounce from it, continue higher, away from our baseline, we push back to it. Once we test it, we pick up some stops, we break below it, we retest it, we continue lower. Now we're super far extended. So yeah, a retracement towards the VWAP. We have some more internal liquidity resting here. We have our London session breaker block. If we flip it to the 15-minute time frame, form a consolidation Asia range. Basically, we sweep the low, form a lower low, form a higher high, and a lower low. So old support, turn it to resistance. 925 next. Are you talking about NQ? Let me pull up NQ, then look at NQ. Yeah. And if you're a beginner trader, just one advice that I can give you is focus on one. Either do a good job at NQ or do ES. I prefer ES because I like the precision. I don't get the same level of precision on NQ because, yeah, prices are further away from each other. Right here we are in the 1500 levels. And on ES we are roughly at 4,000, so that's one decimal less that we have to worry about, which makes it a lot more precise in my opinion. And fair value gaps and all this stuff is easier to be respected because of that reason, because the S&P 500 futures price is 3 times lower essentially than the NQ price. And if we take a look at YM, it's YM sitting at 33,000 something, essentially making it 6 or 10 times lower than what we're looking at on ES. Yes, and everyone's different. Like, I prefer ES, I work on mastering ES, and you might not, because it's moving slower and you enjoy something that's a little bit faster, and you should go towards NQ and see if you make more profits there or be more consistent there. Everyone's different. Everyone's personality is different. So it's hard to, give a universal solution to which pair you should trade. But I can really recommend to only look at one. Like, during this entire time, you didn't see me switching between ES and NQ. Looking at potential SMT divergence. I don't care. I look at what I see on ES, And I take my trades based on what I see on ES, period. Someone on YouTube asked me they're afraid to take longs on ES because NQ didn't clear the previous day's low. Yes, but that's also part of the reasoning why I don't look at NQ. I like to keep it as simple as I can possibly make it, like as simple as it can possibly be. And therefore it's much easier for me to cut out noise by looking at the DXY, NQ, blah blah blah. And well, if we're all being honest, it's not really increasing your win rate by that much. Like, of course you could look at all these other charts to frame your trade ideas on the main chart that you're looking at, but you're still going to take losing trades, you're still going to go through a drawdown period. Why not just focus on one, keep it simple, and yeah, you can always watch more pairs later on in your journey. But if you're just starting out, I think it's easier for the beginner trader to just look at one asset. Do you guys have any other questions? We seem to be pushing up higher. Next target for me here on ES would be 4311.75. Let's run it up and say 4312. That's also lining up perfectly with our VWAP, with our London session breaker block, and the 50% of today's dealing range. So far, we're doing exactly the same thing that we did yesterday. Like, maybe the market makers were lazy this morning and they said, nah, let's just use yesterday's protocol, worked out nice. Who knows? Yesterday we did the exact same thing. NQ didn't clear Friday's low, while ES did. We had our 5-minute bullish fair value gap. We entered long off that. Reach into internal buy side. Pull back, 2022 model. Reach the 50% of the dealing range for the day. Hit the 50%, pull back, consolidate. Move higher into a discount to continue lower. While NQ actually took out this London session buy side. So we had some SMT divergence between ES and NQ. Right here, because NQ actually cleared the buy side. So you would have preferred shorts on NQ. But I don't trade past 11 AM anyway. Especially if I already made profits before it. Less is more. It's a tough lesson to learn. Because you're a trader, you want to trade, you want to prove it to yourself that you can trade. And especially if you start like, doing that tape reading stuff, you feel, talking about myself, you feel like, you know, that at every given time, you know what the market is going to do. Because you understand the logic of how it moves, or you doesn't move based on that, but it gives us a perspective, a different viewpoint on how price is actually booked. You could also do support and resistance and end up with the same results, but yeah, and the essence or the best thing that you can do is actually to trade less. You don't have to know what the market is going to do at any given time throughout the trading day. It's enough if you know what it's going to do 10% of the time. Let's say, for example, at the open or inside the London kill zone between 3 and 4 AM New York local time. (10 to 10:30 Judas). Yeah, keep in mind that we have 10 AM news. So in 19 minutes we get news. We seem to be holding on ES, down closing candle with a little volume imbalance down. We still haven't pushed above this bearish fair value gap. That why do I point out this bearish fair value gap? Because it's the fair value gap that we respected with candle bodies and delivered into external sell side. So for continuation, I'd like to see a confirm close above it to maybe use it as support now for the delivery higher into our next objective. Check out the 15-minute time frame. We already hit a 15-minute bearish fair value gap, but we haven't reached a discount yet. And I think that's what's likely going to happen, but we will see. Damn, feels good. Let's open up Bento Book and journal our trade. Head over to accounts, go to the Apex 50K. This morning we made 140 and now we're up 430. That's not bad. So let me check out how much that is. 430.92 minus 140. $290 profit. Let's quickly journal that, so we can review it at the end of the week for our performance overview. 50K, ES1, we went long, set up pattern, A game. So emotionally wise, execution wise, I rank my trades between A, B and C game, also based on the book The Mental Game of Trading by Jared Tendler. A game, didn't do any mistakes. Even though I experienced drawdown, I didn't make a decision based on my emotions to close the trade because it's already in drawdown and I could potentially lose more. That's what I consider as an A game. No rookie mistakes. I entered the trade for a reason. It kept respecting my levels and I took profits. It was a 2022 setup, yes. Breaker block entry, no. Continuation, fair value gap. Tape reading, New York open. Let's add this tag as well. Quickly, there we go. Pushed up higher. VWAP is now lining up with this internal high right here. So we did exactly what we did yesterday. We moved from external liquidity back into internal. Let me quickly take a screenshot of that. We entered at the 50%. Had our stop loss right here, one tick below the low. Buy side, 8.75 points. Now we got our close above this bearish fair value gap, so we could use it as potential support. We also closed above this bearish fair value gap. So these two could be treated like support now. But this for me personally is a higher risk entry than at the low of the day. Let's see if it can hold support or if we are just going to ignore it. Keep in mind, news at 10 a.m. Yes, it depends on how you frame your analysis. So if you want to see lower prices, you want to get in at a discount, at a cheaper price to continue lower. I don't know, I might be using it wrong. Get in at a premium to sell lower. I don't know, this way it makes sense to me. Could be off about it. Yeah, I think so too. But so far, we're respecting the inversion fair value gap, so it's looking nicely. Like I said, next potential target would be right here. If I would have taken it on my 150K, I would have entered with 2 or 3 contracts on here. Easier to do that than on a 50K account. But since it's already in profit, I prefer not to touch it. And then I would slowly pass out of the trade. Way I think about it, long in discount, sell in premium. Does this long in discount, sell in premium? Yeah, then it would just be the other way around. I want to, it makes more sense the way you're wording it. I don't know, I just reference to sell in the upper half of the daily dealing range if I want to see, let's say for example, the previous week's low to be hit. Makes more sense to me. So yeah, sell in premium, buy in discount. Quick screenshot, add it to the journal. Do we have the right account selected? Yes, add trade. Done. Bum, bum, bum. Go over to the dashboard. The Apex 150k is almost up 1%, and the 50k is up 1.2%. That's not bad. Equity curve is looking nice. I'd still, only been 2 trading days so far. Not expecting it to go up all the time. If we look at my previous accounts, that's wrong. I added some wrong data to this account. But right here, you have these rallies up, you reset, you continue up higher, reset to a fake market structure shift, continue to run for buy side, from internal liquidity back to external. News are entering the market in 10 minutes. Let's see, we still hold support here on the inversion, paired with this little order block right here. This would have been a paper trade, entry on the inversion, stop loss, 1 tick below our order block, target the VWAP, or simply 5 points. For a 133 risk reward or internal buy side, 1.73 risk reward. ES looks better than NQ does for longs. I don't know, I don't check NQ, and I also don't want to flip charts too oftenly. And there we go. Where did we deliver into this internal high? Inversion fair value gap. Precision. All right. Interesting. We swept this internal high. We're above VWAP. Let's see how this candle is going to close. We close above, so we have a new inversion fair value gap. Now we already hit a premium to sell from. This is our dealing range for the day. So we want to see what if this 9:30 opening move might have been a Tudor swing back inside of the 15-minute breaker block. 50% of the current dealing range. VWAP to continue lower, or if we get a reversal after having swept the previous day's low without wanting to see lower prices, which for me would be at 4277, previous week's low. So something like this heading into news. We go up to hold resistance here in this bearish fair value gap. We also have the New York midnight level to potentially hold resistance here to continue lower. Or we invalidate all this with news at 10 AM, hold support here, and continue to run London buy side and sort of do a seek and destroy day. We have Asia starting the day, we cleared the low and we cleared a high. So now we have a London range, we sweep the low, and then New York goes back up to sweep the high. And that's, pretty much a seek and destroy trading day. Move from external back into internal. Go to the 5-minute. Retested the high of the inversion fair value gap already. Close above the VWAP, kept holding support. Yeah, let's see how it's going to play out. We're inside the 1 hour bearish fair value gap. for now, I'm going to stay away. Enough profits for today. So yeah, this is going to be the end of the stream. I'm going to take a quick break before 10 a.m. news. And let's see what we get. One day. One day. Yeah, I also sold pretty early on, but I don't know, I'm content with it. I learned to accept smaller profits, and I don't even care of how much it continues to rally. Eventually, one day, with 10 years of experience, might get easier to hold through all this analysis, like you said. We all get there eventually if we don't quit. Yeah, and you're profitable, and that's all that matters. You pass the take profit trader account with no issues, and yeah, we do not always have to chase these big runners. the only way to maybe profit from these big runs is to take a partial, enter with 3 minis or 2 minis, secure your profits, and move your stop loss to break even on your A plus setups. Because then you're risk free, you have nothing to worry about. And yeah, if it continues, let it continue towards, for example, the 50% of this PD array. And yeah, get on with your day. If it would have been my 150k account, I would have done that. I would have entered with more than one contract here because the account is 3 times bigger than the one I have executed on. That's the 50k. And yeah, move my stop loss to break even. If I get stopped out, I secured 8.75 points. And if not, I could have potentially secured 16. Alright, guys. But that's gonna be the end for today's live stream. Thanks very much for joining in. And yeah, make sure to not give away your profits if you have made profits today. Secured, end the day in profit. It's gonna be much better for tomorrow. You won't open up to the potential risk to turn a profitable day in a drawdown day. And yeah, you start with a good mindset into the new trading day. We live to trade another day. Even sometimes we have red days, like I, for example, have on this funded Apex account, but it's okay. I can live with that. I get over it, and I do not try to force it to make it green. Alright, guys, thanks very much for joining in, and take care. I will see you tomorrow again. Bye.
set. Chase a set. Never chase a move. Move. Watch out. Thanks, buddy. Hey, what's good, everybody? Good morning. Good morning. Make sure we're all set up here. Cool. A few minutes till that 10 o'clock news hits, so we'll see what we get. Quickly before it drops, got about 30 seconds. Run through it quickly. I'm really interested in this here, right? We have a high, low, higher, high broken. So we have a breaker formation. This is also the YouTube model. Short-term high cleared. All right, breaking structure. So this fair value gap really will be kind of, right, as we often say, the line in the sand, to where if we can get above it, I would look for this high here. Right, if we close, like closing above this on the 15-minute sense. But for now, we'll see what we get on the 1 minute. Right, we do have some inefficiencies here, as well as lower right here, which we just got into. So we'll see if we want to hold this. Notice where we came back into, the 830 exactly. So at this moment, oh, we're actually dumping pretty aggressively. Not fully convinced and just an absolute melt. Because if we go to like a 5, like the 15 like we were on, notice we have this order block here paired with this. So in the same sense that if we were to get above this, I'd look for higher prices. Now that we've tapped it, if we can actually close back underneath this, I do like the idea of revisiting the low. Because we're still within this 15-minute inefficiency. Sell side cleared. As of now, I'll just have to give it a few minutes to let the price kind of play out here. My house. So yeah, we'll watch how this 830 reacts. Whoa, excuse me. Because we'll have to wait for the 15 to actually close here, right? We could easily kind of hold this. We'll see what we get on lower time frames. Volume and balance holding well. Two-minute bearish. Let's see what we got. Aggressively selling off. All right, I'm already in and out. So that was a little quicker than. Price is just moving quick this morning, so we're gonna go ahead and. Cool. All right, so we'll walk it through real quick. We got in prior to the news release. So this here was, right, we got in here before news, because if we were going to use this fair value gap, I'd like that. So we gave it a chance. My stop was under this low, just because, right, news was coming. So for me, I'm not trying to take a loss, especially with this huge, right, good thing it was here. Because in reality, I was just looking for this expansion. So I was kind of expecting this higher into midnight, which is what this entry comes off of. So my stop's right underneath it, especially after tapping it, right, closing back above, news coming out, a lot of factors. So I'm not trying to have any risk. So obviously we get stopped here right at this low, really break even right where we enter at, right on that fair value gap. We then go back in, right? This is kind of all I needed to see, this aggressive down close candle through 8:30. And although we didn't close underneath the 15 on a 15-minute chart, this is when we anticipate price to continue lower, right? So we cleared it, we cleared the 8:30, we clear the 15-minute. Entry just comes on a retest of the 8:30. All right, so expecting 8:30 to act as resistance, we enter there. And I just got out at 5 handles, which is right kind of under this low here. Yeah. So not bad, right? Nice and quick, just as I like it. Immediate feedback. We'll see what we want to keep doing though. 2-minute. Like if this 2-minute stays open, we may actually have another opportunity to look for shorting. Could have held to a sell side, right? We get into that sell side loop we were speaking of. So we don't hold for the full target, but that's all right. If we're going to accelerate, however, right? So we've used that. What could we get to? We'll see how we react at this sell side pull here. And as I often say, now that we've hit sell side right, it's kind of more of a waiting game again. Here we're in the middle of that move, right? From range high to low, we still have targets. So like catching the middle of those expansive moves where it's easy delivery. Now that we've hit the sell side pull though, I want to see what kind of happens, right? The 1-minute has closed underneath that low. So has the 2-minute, okay. But the 5. I want to see how this 5-minute closes, right? Because say we start closing underneath the low, I would probably look for this inefficiency low to be hit. And this inefficiency, right, this fair value gap here is just a 15-minute. I guess I can mark out some swing lows in case we do get real animated. So we're continuing to close underneath. 2-minute. Yeah, okay. We just hit the low of this fair value gap. To be honest, if we're going to continue lower, okay, holding the 15, immediate rebalance here. If we're going to immediately rebalance like this is a case where up close candles now, I would look to hold price if price wants to remain bearish. So if we want to reach for these lows here, and Q pretty bearish as well, right? Just right now it's low. Pretty aggressively too. 2-minute, 1-minute. Interested to see now, although it's a 1-minute, does this, since we've closed underneath the 15, do we want to start using now this 15 here, right, as resistance, as a new premium, and continue kind of this delivery here where we just melt? Let's see, from here to what? 7, back up. Yeah, I kind of would look for that. See the 15-minute continues to offer us resistance in here. Accelerate lower. I like the volume imbalance. Ideal for a run lower.
Order filled.
Hey, bro, I can't lie. 19.5 to 21.5. You forget I'm American. We got that weird date system. So, okay, wait. April or May 19th. Okay. Maybe? I'm like, what the heck? Nah, you good. It's really our fault. What are the weird ones out here? But I'm guessing that's May 19th through May 21st you're referencing. Which I wonder if I have on my face.
Order filled.
I usually have, oh, there they are. I was like, I thought I had them. So I just turned on the new week opening gaps from May. To be honest, though, yeah, I got them up here. Because I usually keep them all saved. May is a little farther out than what I would usually use, if we're being honest. So while we do have these here, and that's nice, I'm not necessarily putting too much weight into it. What's May? What's April? None April. Yeah, we'll let it rock. So right, new sell or old sell side pool. We're still within this 15-minute, right? So we can continue to use that. I'm interested to see if now the old low becomes resistance after closing through it. Right, high, low, higher, high, broken. Fractalized breaker here. See if we go like higher time frames. High, low, high, high. Okay, I like that. We also have an inversion, old low. Huge fair value gap here. So this will be tough. Like if we want to restart or start revisiting, right? This is such a large fair value gap. It'll be hard to really pick a certain target. So I would go with the levels here. $15. Interested to see how the 15 closes because this is a 15-minute fair value gap. So if we're going to use it as right an inversion, we would expect the 15 to close underneath it. If we close inside of it, we might have to wait a little bit longer. I like that we're right, kind of rejecting this 5-minute fair value gap. On what time frame? I mean, usually the 1 minute. Just gives you the cleanest read of the actual close and open. So once the new week starts. Equilibrium is here. getting back under this fair value gap would be ideal. Right, closing under there on the 1 minute would be nice. If we're looking for the prices here, right? If we start holding this, look for that retracement back into equilibrium here of this range, which would be this high, right? This fair value gap. So did we close? We did close under that, just barely. And that's kind of all we need to see. See if we want to use it and continue lower now. Cool. Closing under this low as well is nice. Like to see that. Right, we're looking for this level here to get out. Cool, nice. So I'm out there again. I went short off the 15-minute inversion. Well, that's another 5, a little more than 5. I think this low gets hit. All right, that's this. That's the actual low from Wednesday. But in case we want to do what we're doing here, right, wicket, we just closed at this low. All right, so here, same thing. Sat through a little bit of a retracement with this entry here, right? We enter on the 15-minute low. Get a little deeper, but like I'm saying, I'm trusting this 15-minute to hold us. So I'm not nervous of this run at all. Old low still offers us resistance. I really like this to stack a position here. I was just too slow, right? Because we close underneath the fair value gap, which means this here would have been a confirmation entry to add that inversion. Just you see we get out here at this, and we just hit the actual low. So continuing to melt, right? We're involved in all that. Nice. Would have been nice to add more contracts here, but I'm content with this, right? We don't complain about money made. Look at that reaction. So now, just like we were talking about here, right? Sell side was hit. Needed to see if price wants to kind of continue or reverse. Same thing here. This is a daily swing point, however. So this one's going to be a little bit more important. Right? Daily low we've just ran. If we continue lower, we may actually continue to dump and dump. Let's see what we got. See, we can run lower. Yep, that's good there. See, as far as a daily level, 4270. We'll see how we react here. Closing under this with the 1 minute is interesting. 5 and 2. We still need 2 minute as well. Interesting. Okay. I'm interested in seeing if this wants to hold us here. So I keep on dumping. Actually, a 1 minute. Large. How's this? Mm, yeah, I'll see how these levels want to interact. I like the idea of using the 2 minute. It's just a little large for my liking, right? Because we still would need to allow. That's like 10 handles there. Let's see. We do have a 1 minute here, as well as here. Right, if you look, right, like we were speaking of earlier, that immediate rebalance up close candle holds us nicely. So we're respecting premiums. If we're going to continue to sell off, I would look for one of these two fair value gaps to hold us. Continue to just send us lower, really. We would need... Because the 15, the 5, what about the 2? So the 1 and 2 minute are the only ones that close under the liquidity. I'm going to move this. This is the actual sell side liquidity. Because the 5 still holding that nicely. And the 15, huge wick. The 5 minute actually opened with a bullish volume imbalance as well. So we'll see if this is another immediate rebalance for another run lower, or if we're kind of reaching the bottom here. Right, we're not really in the market of calling bottoms or tops. So for me, I really would continue to look for a continuation, right? Unless we start getting back above, like if we close above this and this one, then my attention would go back to like this high.
Order filled.
Order filled, he said. Giving us more of a consolidation here on this one compared to this one. Right, because you see how on this sell side pool, we really, once we close underneath it, we just continue to push lower. Which is why I'm not necessarily nervous about a retracement into it, because I see this as simply returning into a premium right after already confirming its direction. Whereas if you notice at this sell side pool, right, you can really see the difference in the way that we're consolidating around it. I still would like to see this volume imbalance remain open. Push for this low right into just more sell side objectives. We'll watch here. I like that we're getting back underneath this old low here with this candle. Want to see this continue to offer us resistance.
Stop filled.
Let's see, 2, 5. We get a 5-minute closure underneath. Only 1 2-minute still. What's the 15 up to? 4 minutes till the 15 closes. 15 will be pretty significant. Like if we get the 15 to close underneath, I would look for this area for sure. So what do we got? 4 minutes. So once the 5-minute candle closes again, that'll kind of give us that confirmation. And if I'm being honest, I wouldn't really want to see candles close back above this, which it looks like we're gonna. Bearish volume imbalance, however. So we'll let this candle play out. Might give us a chance to get back underneath. But right, if we start using it, so just like that, right? I don't like seeing price do that. When it taps into this and immediately rejects like that quickly. Right, these are the things I'm looking for in price as it's delivering to kind of build my narrative. I don't like that price here, right? Taps that perfectly and shoots away aggressively. Because we have this inefficiency here, and it's still on a 2-minute, right? Like if I was to pull up the 2-minute, we never hit the 2-minute consequent encroachment. So I'm not in a rush to say that, right, we're reversing from here, especially because we're building lows. All this could simply be a run on this high. I could see us running this high out, still holding within this one or the higher one, and giving us another one lower. So I'm not really confirmed or looking to go long until we start closing back above, right? At least consequent encroachment maybe of the 2-minute. He said reversal start around, that's fair to say. Sometimes. Really depends on the opening range, what the market profile is for the day. Good morning, decent with the late good morning. Love it. See how. So yeah, just consolidating. Not surprising there. NQ is reaching for its lows, cleared all its lows as well. What's interesting is the dollar actually melted aggressively with the indices, which is, yeah, that's interesting. Because let's say dollar now wants to accelerate higher. That would be nice to see these actually continue to melt. Can't trade right now. Hey, I forgot about that. That's lit. Eval. Yeah, no need to trade. Honestly, I would sit the rest of this week out. I mean, I'm not going to tell you what to do, but right, NFP, like I say, my protocol, Wednesday morning, I'm done. Especially when we have a pretty heavy, high impact news schedule. I'll just let NFP play out, right? First week of the month. Let price kind of pick a direction, see what it wants to do. So we close underneath again. So like to me, right, we can never really say with certainty where it's going to go. I would favor lower prices because we continue to close underneath this sell side. Like in my mind, and just from seeing price action so long, if price wanted to, let's say, rip higher, I feel as if we would hold this rather than continue to try to close below it. Right? We could obviously reverse, rip our face off, be completely wrong. But I'm just kind of going off the probabilities, right? What I've seen before. And if we're going to continue this type of movement, right, where we continue to try to get underneath, close underneath, close underneath, close underneath, at some point, I think we do. So we actually have hit that low. So hold up, let's see. Which I should have partialed. That was not good. So if we can get right at that low again, I'll partial one of the contracts I have on. Which I should have done that already. I wasn't paying attention. So we're actually okay. We got that partial off. Cool. So we got that partial at 5 handles. Notice where we close here. Right now we're right on that low. So like I'm saying, we continue to flirt underneath this level. I would prefer that we stay underneath it. We have now a fair value gap here aligned with a volume imbalance. So to be honest, I would like to see this hold, even though we do have relative equal highs here. Right, this is kind of where it gets tricky because we have technically cleared out a sell side. Right, it's not the sell side we're looking for here, but this is short-term sell side. So we've cleared out sell side. Right, we have resting buy side here. At this point, I could really actually see price venturing up to run these highs and still breaking again. So right, still looking for lower prices, not switching that bias. Really, for me to switch that bias, this fair value up here needs to get invalidated. Right, so we're this is more of just high resistance liquidity, right, run if we're going to go lower. So from here, right, we would favor rejection. If we get back above it, right, we may just continue to consolidate because even though we are running lows, right, we're just consolidating here. So I were to say if we were to get back above this, right, that's when these highs can come into question again and we can continue to chop here. Which we get. Wake up Sunday morning. So right, and although we can run this high, I could see that happening for sure. My stop at this point is actually going to be, because I got short first here, I added again here.
Order filled.
I got short like this, added again here. And for me, I'm
Order
already
filled.
partialed out.
Order filled.
So this will kind of determine where my stop is going to go. Because as of now, it's still here. Because we could run this high and reverse. If this volume imbalance remains open, I'm actually going to go to this swing high here. Right, just so that way, less risk. We're already partialed out, so we'll be stopped in profit. And if we do run this high, right, there's always another opportunity to enter, as I say. So if we do run this high, right, run my stop out, I could always look for another just chance to get short. Notice what this is forming though, right? Like I'm saying, this old liquidity level is important. You can see how price is using that here, right? Wicking it, wicking it, wicking it, closing underneath, wicking, closing right on it, right? Wicking it, volume imbalance right on it now. Like I said, I prefer this stays open. So it does, just barely. But right, that right there classifies it as open for me. So at this point, stop's going to go ahead and get moved.
Stop filled.
Cool. Cool. All right, so there's that stop out. Just like we say, we continue to wick. I'm perfectly fine with that though. This is consolidation. I'm not really a fan of trading in that. So we gave it an entry here just because that was clean. Right, we get out here, stopped in profit here at this high. And now we'll see what we do. If we just continue to chop or what. At this point, I wouldn't look for anything until we get back above this high. Jeez.
Order filled.
So just choppy, chop, chop, chop. Let's see, let's go on the 2 minute. Okay, 5 minute. Geez, 5 minutes hideous. 5 minutes is wiki, wiki, wiki. 15, same. Hourly is a little high for my liking. Right, we close under the 15-minute sell side pool, which would point towards lower prices on the 15-minute. The 5 minute continues to wick. Right, we haven't been able to close above it either. So the 5 minute also pointing 5, 2. Yeah, 5 minute also pointing lower, right? Suggesting lower prices. So yeah, we still favor lower prices, but this will be that high resistance liquidity run, right? If we get it. And I can kind of show what we're looking at, right? 5 minute, notice how it's all wicks here, right? Wick, wick, wick. Notice how the bodies are refusing after closing underneath the sell side pool. Look at those bodies. That's not random, right? So bodies holding, which points towards wanting to use this as resistance. 15-minute, right? Trying to immediately rebalance here. Notice how it's wicking back underneath as well. So we're getting higher time frames to start confirming that lower prices, which is nice. All right, there looks at sell side again. Equal lows. Still holding here. So now we have equal lows. We would look for those lows. Let's see, maybe it'll sweep equal highs. That could be it. 5 and 15-minute point upside. Alex, honestly, I'm seeing the exact opposite, if we're being honest. I guess as I just explained it, 5 and 15 to me, point lower. Yeah, it's possible what you have there, Swift. Right, if we do want to retrace. But oftentimes, if we do something like this, we're going to have this high resistance liquidity run. We may not return up into these highs. Because we've tried what? So after creating this initial high, we tried once, twice, 3, 4 times to run higher. And we keep hitting this wall here. So to me, that means price does not want to get up here. And instead wants to reach for these. We'll have to see though, because now that we've cleared this sell side, we have now a new inefficiency here. Where does it form? Right, lo and behold, surprise, like we say, that low liquidity level just continues to be used. Closing underneath sell side would have been ideal, but right, we do have this here. So we'll see if this inefficiency and now the old low. Like now, because right, this high ran this high. Order block, fair value gap. Old low. This is when, if we're going to run lower, I would not actually want to see this high get broken. At least before this level here. If we hit this level, then right, we could retrace, run these highs, potentially break again. But ideally, we actually take this low before we take this high. But you can see how price is just choppy here, right? So even though we're getting that lower delivery, it's high resistance, super choppy. It's not really fully committed to going lower.
Stop filled.
So with this, I would want to see a quick move lower. Since we've hit both of the fair value gaps.
Order filled.
We have a bearish volume imbalance here, right? So I would want this to remain open, which means we close with a down close candle. Notice where we returned it into here. And right, that original volume imbalance. So now, right now at this point, let's see. Well, wait, let's start moving this. We've got a lot going on. 1 minute there. This one here. Right, I don't like how we're holding this sell side pool here. I don't want to see us continue to close underneath it. Right, because this remains open. Which means in theory, I wouldn't want to see this high here broken. This swing point. But now that we look at this, let's see. High to low. All this in here is balance, okay? I would say from here, like this. So if I'm going to see this as a balanced price range, that really means that the fact that we're even playing back up inside of it isn't favorable. Because you'll see, right, on this retracement, we actually hit the equilibrium perfectly here. Oh, brother, right. So this is just that boring delivery that we often speak of, where even if we do get our targets hit, I mean, it's just so high resistance, so choppy. If you're not someone that's used to this or expecting this, right, this is where that mental capital loss be coming in. Just waiting for price to make a move in either direction. Right, we favor lower prices, so we'll commit to that idea until proven otherwise. Yeah, I don't like that. Using now that BPR low. I mean, look at that. To the tick. You want to see aggressive. Nice. I like that. Right, this high remains like we're expecting it. Beautiful. So I'm out there. $69. Or 69 and which we could probably keep running, but $45. Got in a little short. Nice. But pays off. Like we say, we're not looking for higher prices. Nothing really in here was pointing towards that. Pointing lower, just the fact that we got to sit through that. So this is what the patience pays off. But as I've often said, the probabilities have to play out, and they play out here. And like we spoke about, as soon as this candle took this high, broke lower, the idea of running out these equal highs in my mind is no longer valid. Because, right, we tried really 1, 2, 3, 4 times to run out this high, and we failed. Instead, keep using this fair value gap here as resistance. So now when we try, right, that final time, while running out a buy-side pool, fractalized, and still closing with the wick underneath, right, then breaking structure at this low, right, creating the order block perfectly aligned with the old sell side, leaving behind a fair value gap, right, everything in here points towards low prices. And if we're being honest, this right here, right, when these levels line up, that's too pristine, right, it's not random. Can you not do that, buddy? Thanks. See with the higher time frames. So at 5, nice. I mean, look at that right there. So, hey, quit. Right, being able to, ooh, look at that touch. Hello. Perfect. Perfect touch of the high. Perfect touch of the low. Now potentially we're return into this and then an actual run through the low. That'd be nice. About to hit 1050 as well. So if we hit that at 1050, that'd be pretty nice. Mm-mm. 15. Yeah, that was clean too. All right, so we can just, we're not, I think we're going to run lower, but we can kind of explain why. This right here was very much a sign of price wanting to go lower. What those last two? Yeah. Sell side liquidity, right? Sell side here, sell side here. Just liquidity pools. That's all we ever do, right? Target liquidity. And look at that. Perfect again. But we haven't actually taken this low, which is why I'm saying I would like to see potentially a return into this and then a run lower. But we did just create this, so we may just give us a volume imbalance entry, run that low out from here. But if we were to get back up here, to me, right, that would be a very nice, yeah. Doesn't matter because that plays out like we're expecting. And right, this is why we always are looking at price in the moment to give us an indication of what we will expect. Right, had we kept chopping here, a run into this would have been expected. Opening with the volume
Order
imbalance,
filled.
this tells me that price wants to run lower. We made equal lows. Just makes sense to run out these equal lows and now clear this high time frame sell side. So there's our final target. I probably should have held something for that, but that's all right. I had a limit entry set here. I'm going to remove it. If we would have got there first before this low was taken, we would have kept it. 2 minute actually closed underneath that as well, though. Interesting. Let's see if this 15, let's see if the 5 as well. 5 can close under that. We might just keep melting. We got in a 4 hour. Hey, take care, brother. I'll have that recording up for you. I would look for whoa. Wait, what daily low? 42.59. I don't really see that low you're talking about, brother. 4259. Yeah, I'm not seeing that. Like for me, our sell side targets are already hit, right? We've hit both of these daily lows. That's what these two lines were representing. Now we do have this daily low here. That's quite a distance though. I would look more for a return into, right, maybe the low of the 4-hour inefficiency now. If we want to keep on selling off. But so far, price playing out really pristine today. I always have that on, honestly. I don't trade without that on. Because if I turn it off, where was it on the daily? It takes away some of the daily volume imbalances, which I don't like. And right, I mean, look at the chart here between the two. Like if I keep it on, just a lot cleaner in the liquidity levels and the way it moves, rather than right leaving a lot of these gaps in price. So for me, I've always kept that on. I mean, I think it shows, I mean, right, we're hitting these levels and respecting these levels perfectly to the absolute tick. But if I pull them back up, whoa. Lost them. Yeah, that stays on for me at all times. For me, I found that the gaps themselves in the actual contract aren't as precise. That's really all. And it's really up to y'all. This is personal preference. For me, I've tried it with both. Right, I've literally had charts actually side by side. So I had one with the contract adjustment or adjust for contract changes and don't adjust. And this chart respects the levels more precisely than the other one. That's the same reason I don't use the actual contracts, and I only use ES1 as well. Because I mean, right there, look at that, right? Hard to argue right here. 1, 2, perfect touches, perfectly holding the low, perfectly holding the low. Yes. All traders that have it off are still waiting for sell. I mean, that's fair, yeah, right? Whereas me, right, my sell side was hit to the tick perfectly twice. It's up to you. That's what I'm saying. I'm telling you, I keep it on. That's just me though, right? So if you find that you trade better with it off, that you're more precise, that's fine. I've just found in my trading that my precision is much greater with this on, right? It respects the levels I'm aiming for. It reaches into the levels I'm aiming for. It respects the PD arrays I'm using more often than if it was not on. Like, let me see, just to see. Right? So like the sell side that we hit, like you're saying, would be here and here. So I guess we tap that one, which is cool. But this lower one here, Right, so like you're saying, you're probably waiting for this low to be hit, which we could still get there from this fair value gap. But for me, right, I'm already out because I'm using these levels. This low as well, right? This low would not be the same with this contract off. But we can see how price uses this, I mean, perfectly. Right, look at that. So at the end of the day, yeah, it's just preference. It's just from all my years and time I've spent sitting in front of these charts, I do a lot better with it on. He said, brother, hey, if you don't like it, you don't got to do it. That's what I'm saying. Trading's individual. So if you like keeping it off, right, and you like having those levels, that's fine. For me, no, thank you. And I mean, you can see how this level now, right? Look at that. Let's see if we want to continue. Maybe see this. So we already hit that though. We do have a 1 hour right here and here. What is this? Yes, no. I mean, you could say that, Matt. Yeah, that's fair. Any line will be respected. That shit cracks me up. Yeah, that's fair. But I mean, like I say, I'm not trying to argue for or against it, fellas. I've made money doing this. I'll continue to make money doing this. It's always been on since the beginning of our streams, and I think you've seen the precision that comes with it day in, day out. And so if you don't want to use it, it's up to y'all. If you do, that's also up to y'all. Like I say, I got nothing for or against it. It works for me, so I keep it. I do worse when it's off. Simple as that. Not as precise, not as accurate. Old contract data. I know. Oh. I'll be addicted to the hood. Old. Oh wait, old. I didn't even believe that. It's not really old contract data. It's just smooth as the difference between the opening and the close of the contracts. The data is still the same. Hey, Guido. Take care, brother. Have a good day. Have a good day. Catch you mañana. You okay? Run away from your baby. Run away. Knock it off. Fly in the loafers. Baby bracelet. Hey. See what time is it? 11:10. 5 more minutes. See if we run lower. Employment balance. Old low. 5 handles. The intimacy. And then know what the damn is. Mm-hmm. 4260. 56. Yeah, I'm short right now. 4261 gets me out. 4267 stop loss. Boom, 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 boom. Oh, nice. Okay, okay. So that high right there was a stop. This guy taken. Break even. I wonder if this high. Yeah, 1, 2, 3. Nice. 4, Okay, okay. Yeah, I think you're more invested in it than me, Matt, to be honest. Not saying bad, but like for me, it's just if you want it off, you can keep it off. If you want it on, you can keep it on. I'm not really someone that likes to change my ways if it's already proven, you know what I mean? Ooh, overtake that. Boom, 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 boom. Boom, 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 boom. Boom, ba, boom. Consolidation. Well, we're hitting another consolidation, so we'll just go ahead and yeah, that'll be it. No need to look for more. Let's see what we got here. We'll show just a day. I picked up like 5 of them Apex static accounts. So we'll share. Nah, that's the thing though. There's not going to be a universal solution. Trading's too unique for that. That's where I think you're getting yourself caught up. Like for me, someone could tell me I made $1 million with it off. And I'd be like, hey, good shit, brother. I still ain't going to change it. Because I know it works for me. And like I said, right, I've already kind of given my 2 cents. More precision, more probabilities, better executions. You just got to have more time with it, brother. If you like it, use it. If not, don't use it. You don't got to get caught up in the analytics of it. This will probably just be a wick. I think we're just consolidating here. Amen. What the? Hey. Yeah, I don't know. Right, as you spend more time, that's where just the time aspect will come in. Like I said, I've used them both. So for me, I just favored one over the other because I've had repeated, I guess we'll say, results with it. Change window. So we got from the beginning, quick, long, try to before news. Right, once news came out, stopped at break even. This really gave us all the information we needed for the day. Right, and from then on out, we were just all shorts, only looking for shorts. So we get short at 8:30, right? 5 handles out. We get short at the 15-minute, 5 handles out. We get short again here, just short of the volume imbalance. I was actually using this wick. Could have added more in here, but just decided to hold through that, right? So we get short here, we get out again. And from there, we're all done.